G'day and welcome to the Off-Chain Podcast. Don here with you, and our guest today is Nick Cowan, CEO of Valerium, formerly the CEO of GSX, that's the Gibraltar Stock Exchange. We're excited to have Nick on the show today to talk about real-world assets, RWA, tokenization, and how Valerium is building the bridge for on-chain settlement. With RWA taking center stage this year, we wanted to have a conversation with someone bridging both TradFi and on-chain finance. So let's dive into our chat with Nick Cowan. What is your origin story? Where did you come from? What inspired you to make the move into Web3 coming out of TradFi?
So the origin came from being in the investment banking business and trading business for this is the 40th year. And I started in London and went to Japan, became the head of equities, and then left the industry to trade my own capital. And then I helped Gibraltar, this small British overseas territory at the bottom of Spain, open a stock exchange, which went back to around 2013. So we had really been sort of front and center of capital markets and trading and risk management, but then actually operating an exchange itself. And Gibraltar as a jurisdiction started to carve out itself in terms of regulations to try and be a thought leader and front runner in terms of a jurisdiction for DLT regulations, which kicked off really around 2016, 17. We started to really get our heads around, could we, with this emerging technology, was there a use case for us to try to primarily use tokenization to change the way securities are issued, the way they're settled, the way they're managed, the way they're traded. And the driver for that was really over my time frame of 40 years. Not a lot's changed. It went from T+3 to T+2, and in fact, last week went to T+1 in the States, but it's still T+ something. And our thinking was, look, could we take all of our capital markets knowledge? Could we embrace this technology? And could we try to take something that is already highly efficient, but use innovation to basically make it more efficient? And that obviously is how normally innovation can be deployed anyway. And that set us on the journey to try to work out if we could move to a T-instant platform, if we could deploy technology to be able to drive through efficiency, what would that look like? How does that operating model work? What technology do you need to support that? And what are the outcomes? So it was really just through a journey of being in Gibraltar at the time, which is, I very much hold responsible for exposing us to new technology and putting your heads around, okay, what's the art of the possible? If people are saying this is the way things have always been done and you can't change things, of course, for me, that's an invitation straight away to say, okay, can we make things more efficient? And what the journey we've been on, really starting to carve out around 2018, 19 in terms of the actual design through to where we are in 2024.
Okay, so you were, if we can go back to pre-Gibraltar days, already working in finance, kind of doing very well in that arena, and then end up working in Gibraltar, end up helping them to start an exchange there. So again, really top of the game, and noticing that there were inefficiencies, as you say, or there were possibilities that weren't being capitalized on or maximized at that stage. And so did it just happen to be that blockchain technology kind of was getting maximum news around that time, or was it something that you were particularly searching for or looking into, or trying to suss out what kind of possibilities or what technologies are around that might be able to meet the kinds of needs and problems that you were seeing in TradFi, like specifically to fix TradFi problems, not necessarily to then dive straight into crypto and blockchain and Bitcoin and things like that. Obviously, you're thinking, here are some real world problems. We need some real world solutions, and looking to blockchain. I'm just wondering, is it just coincidence that you were in Gibraltar at the time? Gibraltar was looking at these different kinds of, maybe asset classes or technologies, or the technology happened to come of age in that time? What do you put it down to there?
Yeah, I think, look, it's a great question. Our first exposure was in around 2015, and we were approached as stock exchange, the Gibraltar Stock Exchange, we were approached by an issuer who wanted to issue, believe it or not, a Bitcoin. It was actually called an ETI, but effectively it's a bit like an ETF. And we, around 2015, obviously I'd heard of Bitcoin, but I genuinely didn't really know too much about it. And in order to get the regulator in Gibraltar to get comfortable with us listing this thing, we had to really understand what is Bitcoin, where is it traded? It was traded on Coinbase. How is it stored? What's the risk cycle? A fiction character, Mrs. Miggins. What are the risks to Mrs. Miggins? Can she buy this thing? What does it look like? Can it be stored safely? Can it be hacked? And that really got us into, if you like, that asset class and started us thinking, okay, this is pretty interesting. And if you look at if you like, TradFi, as I said, it's efficient. But there's this 2-day lag. And where there's a 2-day lag, you have counterparty risk. You have settlement risk. You have capital that has to be posted by the broker, and so it goes on. But what you don't have is a lot of opportunity in terms of interoperability. And what we discovered as we looked into, especially then, they just breaking through, the crypto exchanges were kind of breaking through in 16 and 17. You could trade something 24/7, right? You didn't need a broker. You could move stuff around instantly. You could do it just with the tap of a keyboard. And that really, if you like, got us thinking about, we'd learned about Bitcoin, and we actually issued this thing, listed GSX. And that got us thinking, okay, there's a lot of challenges with crypto and crypto exchanges, right? And at that time, nothing was regulated anywhere. So we were thinking, okay, could we take the best parts of this innovation, take the best parts of TradFi, which basically emerged over, let's be honest, 200 years, right? So, the regulations and the approach of regulators, etc. And there's a lot to be said. Could we put those two together into a model which would enable those efficiencies to be, or inefficiencies to be dealt with? So in theory, could we build something which would allow market operators, be they professionals, be they issuers, be they investors, to get those benefits of the crypto exchange, if you like, ecosystem, and combine that with the TradFi ecosystem to allow you to imagine being able to use your Bitcoin holding to use on margin to buy Apple on a Sunday morning on your sofa watching TV with a click of your phone. Now, if you can take a step back and think, okay, that's mind-blowing. If you can imagine that could be possible, how do you get there to enable you to buy? And I'm not talking about an Apple lookalike. I'm not talking about what we'd say like their contract for difference, for example. I'm talking about appearing on the shareholder register at the minute, the second, the millisecond you do that trade. And if you can achieve that, it doesn't have to be on a Sunday morning. It can be any time. But if you can achieve that, then you strip out all of that infrastructure and those financial markets infrastructure players, which we saw, we saw that noise a couple of years ago. You can therefore cut out all of that friction, cut out all of that cost, cut out all of settlement risk, cut out all of that counterparty risk. You can have interoperability. So you can actually have a security trading in the Americas, in Asia, and in Europe, that you can simultaneously look for the best bid or the best offer, just like you can with an algorithm in crypto. Now, I know you've got to then say, oh, well, hang on a second, there's legal, there's compliance, there's regulatory, there's eligibility. Of course there is, but there is in crypto too. So those are just things you've got to overcome. But the point is, just step back and imagine the possible, and then say, okay, could we do this without blockchain technology? Yeah, I guess, but you kind of need everybody to be agreeing to use the same technology. If you look at countries, they tend to have a flag and an army and a stock exchange, and those stock exchanges don't really talk to each other. The DTC doesn't talk to Crest in the UK. The settlement platforms don't talk to each other. You can have ADRs and common, two different countries, or GDRs and US securities, but they're not fungible. They're not instantly transferable. You've got to have a couple of days, and you've got to break something to create something else. It's just the origins of 30, 50, 100 years of evolution, and we think that it's ripe to break that. So this isn't deploying a technology widget to make things more exciting. It's a whole redesign of the way the financial market operates. So it's grand in its ambition, but you're seeing, thank goodness, because they basically taken all our chips and put it on the tokenization square on the roulette board. But because if we're wrong, we're really in trouble. But you're seeing now, the BlackRocks and everybody starting to say this is the game changer, and now we're starting to think, okay, we're hopefully that sort of 5-year roadmap. We're on the right path. So and that's really where it came from. It was all of that stuff sort of verging and saying it works, but we think it can work a lot better. And we can think it, I don't like the expression democratization of finance, but I do believe that if you know what you're doing, you should be empowered to do what you want whenever you want, because it's your money.
Yeah. I think it's been really interesting seeing a generation kind of come into the market, if you like, just in the last 5 or 6 years. And they have no concept that 10 years ago, the things that you were talking about were actually, a significant problem. For people who have only dealt in crypto markets, for example, perhaps a younger generation, they have no concept of, market closing, for example, or a weekend or a holiday or any of those kinds of things. And so it might seem like, a lot has changed in the last decade in terms of how we think and how we trade. I'm wondering, how did you go from then thinking about, okay, we have a TradFi problem that TradFi tools can't fix, to then thinking, we have a whole new possibility here that's not limited then to just making TradFi better. How did that thinking change for you?
I think it's just, it's just, if you look at the, I think Elon Musk talks about the exponential delta of technology, right? So, when I go back to 89, I was posted to Tokyo as a kid. And I was on this global trading book, and it was a big operation. But in order to download the positions from America, I would get in and there would be a fax machine with about 30 pages lying on the floor with an answer phone. And so I had to listen to the answer phone message and go through the fax and go through all the trades manually. There weren't even mobile phones. And you just, how the hell did we even operate? You look now, and I've got 3 daughters. They are never going to pay for music, right? They believe it's their God-given right to stream any movie and any piece of music for free anytime. So you look at that 30-year, 35-year exponential change in technology. That's kind of it's not terrifying. It's just amazing, right? So when you look at financial markets, you think, none of this has really been used. None of it's really been deployed. And then this crypto thing, as you say, emerged, and it was almost like a light bulb. I don't necessarily, because people say, are you bullish on Bitcoin? I'm a trader, right? If I think it's going down, I'm going to be short. If I think it's going up, I'll be long. I'm just but in terms of that underlying technology and the different protocols that are coming through, that to me was the light bulb moment where you just think, okay, this is really, really a game changer. And if we, as I said, if we could combine to exploit that innovation to put to use, and it was that, if you like, probably just being an old fart, I think it's just being around for so long that you've seen the change in terms of I guess, as you say, the not gamification, but it's a whole new universe of people who want everything right now. And they don't take long to learn, right? They are absolutely there. And the innovation you're seeing in DeFi and decentralized technology right now is just so unbelievably exciting. You've got to basically, I think, if you think that every 20 or 30 years there is a cyclical change in technology, and I guess, the 06, 07 was the first iPhone. So that was the first thing where you can actually hold in your hand something that could actually start to do some cool stuff. That's now 20 years later, or approaching 20 years later. And now we're sort of moving to the next. It's a sort of collision of these different technologies, which we think is just such an exciting opportunity. So I don't think we could do it without the underlying DLT emerging to the point that it's emerged to. You could buy a piece of technology as infrastructure and try to convince different jurisdictions to come onto the infrastructure. What DLT does is, the clue's in the name. You don't need to convince anybody. That's the point. You can actually build a common infrastructure that people can then basically jump on if they wish to. And that empowerment, we think, is so exciting.
Yeah, man. Agreed. Well, then maybe let's move on to Valerium. Tell me, why are you building, or what are you building at Valerium? And why are you building it? And how has kind of the last 40 years, as you've said, kind of brought you to the place of saying, oh, this is something of kind of great value, maybe for the world?
Yeah, I think it's a sort of planet aligning combination of time and technology. So I think we had the Valerium. We sort of woke up to tokenization, as I said, probably sort of 5-6 years ago, and they really started to hone on could we take something like the plumbing, the back end of the way securities are traded and settled and managed, and build something really quite cool. So if you think of Valerium really as two things, it is first of all, it's PLC. So our securities are traded. So we're a public company, which of course has advantages in terms of access to capital, and you need capital to develop this technology. That's the first point. The second thing is we have really two aspects to our business. We have the technology IP that we've designed and built over the last few years, and that first iteration is due to come out later this year. So we call it digital financial markets infrastructure, the bridge, which we can dive into in a minute. We're a technology solutions provider because we want to be able to provide that technology to any financial institution or exchange that wants to be able to get access to tokenization technology. But also we operate marketplaces, and there's no better way to prove your tech works than in your own marketplace. We could have just been a tech provider, but we genuinely believe in the technology, and we want to put that to use, not just to showcase our technology, but also to build marketplaces, both in real world assets, which is a very, very fast growing sector, which again, tokenization is really transforming, but also public markets. Public markets, just think of your traditional securities traded on an exchange. And so a marketplace operator, and a technology solutions provider. And then we have a third vertical, which is Valerium Capital, which is going to be an asset management business, again, exploiting the just ridiculous opportunities that are there right now in terms of protocols, yield farming, all that sort of stuff. So, but the whole ethos of the company is tokenization. I 100% focus on tokenization.
So the tokenization then, like I said before, whether that is something that is purely on chain or tokenizing something that's a tokenized real world asset, but then also providing the marketplaces to then be able to trade those things. Tell me then, what is the bridge? You mentioned it before. Why is it so important for the future of on-chain settlement? What does that mean?
Well, yeah. So what we wanted to try to do was to not get boxed into a corner where we were limiting ourselves to a single protocol. So that sort of hub and spoke, front and center, if you like, model is what we want to embrace all of the innovations coming out. So first of all, we want to deliver a multi-chain solution. That is very important for us. So you shouldn't be restricted by only, for example, an Ethereum-based smart contract. We should be able to embrace multiple protocols to widen the choice, if you like, and the choice, not just protocols, the choice to issuers of the language in which they wish to issue their securities. But ultimately, what we tried to do is to say, okay, we need to, if you think about traditional securities, you have a central securities depository. It's all a bit boring, but actually it's critical. What they do is they make securities, they settle securities, and they maintain securities, things like corporations and stuff, be that a coupon or a dividend or whatever. And if you look at the food chain at the moment, you have a broker, exchange, and then you have a central counterparty and a clearer, and you have banks, and you have central securities depositories. It's like these all have like all these different financial markets infrastructure players. And our solution, the bridge, collapses that to say, okay, you should be able to issue your token, obviously raise capital, but have that token traded instantly. And what you're doing, the bridge, is, if we try to put it in simple language, you're replicating that CSD, that central securities depository function, which, by the way, is absolutely critical. You're replicating that on chain, and then you're moving that on chain, or that functionality, into the matching engine. Ultimately, you're collapsing the infrastructure. That takes time. It's complex, and we run through what we call a parallel run, where we make sure everything is tested and confidence builds. But ultimately, if you can co-locate, in simple terms, the CSD into the matching engine, and that is a technology solution. That's not at our exchange. It's a technology solution that can be deployed on any exchange subject to the local regulations. You're effectively taking the plumbing and you're bunging it into the point of trade. And you would then enable securities to trade in the matching engine with what's called settlement finality. So it means that you've achieved that shareholder register. So you're moving the register of members into the matching engine. And that's the exercise which effectively the bridge delivers. And if you can do all of that, then you've achieved, we think, that pure T-instant, massively efficient, with settlement finality, so legal finality, and you've removed all of that noise and friction that exists in the T+2 model. So that basically is the bridge in a nutshell. It is a technology solution that enables a central securities depository and a matching engine to collapse into a single location. And that sounds very easy for me to say. It is actually incredibly difficult to make it happen. But that's what we're doing over the next few years. So version 1 is due to come out end of this year, maybe drift into 25. But then we basically have all of that reconciliation and parallel testing. And then you bring in all of your additional products and services, because if you look at mature markets, you need cash, but you also need derivatives. So you need equities, you need derivatives. Why? Because that encourages liquidity. You need securities borrowing and lending, because that increases liquidity. So all of those different products and services that have involved in your TradFi, which you're seeing being introduced into the crypto universe, much to the, in some cases, concern of regulators. You need to be able to bring all of that to see this whole sector mature, and that ultimately is a long journey. It's a 5 to 10 year journey to replicate all those different services, which we see as, in many times, particularly securities borrowing and lending, it is a hugely untapped market. It is generally post-trade at the moment. You can short a security and somebody has to then try and find it and borrow it to make sure 2 days later it settles. All that stuff can be at the point of trade, and again, just drive through all that efficiency, which lowers costs and lowers counterparty risk and drives interoperability between jurisdictions and increases the liquidity pool. So if you think of risk management, price discovery and liquidity, and price, those are kind of the 3 big ones. If you can address those, you've started to I think fix some of those inefficiencies that exist today.
Yeah, Nick. So you mentioned a lot of the benefit of like bringing some of these newer technologies to the TradFi stack, if you like, to increase efficiency and reduce counterparty risk and those kinds of things. You mentioned the kind of regulatory framework or environment. How are you thinking through that? Is it more of a case of you're building the kind of infrastructure that other people will play on top of, or are you thinking through, or how are you thinking through how different jurisdictions will work together, talk together, or not? I guess what I'm asking is, are you trying to make TradFi better, or are you moving into DeFi and trying to make DeFi something awesome in a way that, I mean, you did say before, replace the traditional markets you mentioned before, but the regulators might be a little frightened by that. Is there a way to synthesize those two approaches, or are you all in on one side or the other?
I think you're right. I think you can synthesize things. I think the first thing is we firmly believe in regulation, right? So ultimately, regulators need to be convinced that the risks of this technology can be managed and mitigated. I think that, if you look at the SEC's position, I don't know yet if they've actually determined that ETH is not a security. I think they're getting closer to the ETF. They're certainly there with BTC, but really other than those two, their view seems to be everything is a security unless you can prove it, right? And that's this SEC's position. I think you've got jurisdictional arbitrage right now. Different jurisdictions are treating things in different ways. So I think what you have to do is to say, okay, that isn't going to change, but there are regulations in place already. Regulators, they have a role to protect their consumers, protect their reputation in the jurisdiction, but hopefully also encourage innovation. So we don't want to, first of all, in operating a marketplace, we don't want to circumvent regulations. That's I always say it's a bit like running up a high street naked. You can do it, but it's probably not going to end well. So you need to embrace that pretty early on. As a technology solution, we're not the world's policeman, right? So we want to provide a technology solution that complies with legislation. But it's up to you, for example, as an exchange operator or as a financial institution, be you in Mexico or America or Japan, that technology can be adapted for your local regulations. But we come from a point, our starting point is these are registered securities, they will be regulated. So if you think about, for example, at the moment, so if I sell you something, okay, and it's on an exchange, your broker and my broker and the exchange will send those 3 messages to a regulator. The regulator can triangulate it and say, Don sold, Nick bought, that exchange, tick. The reality is they probably don't do any of that. They don't do any of that. But anyway, that's the theory. And then if your broker doesn't report it because they either forgot or their system, they get a slap on the wrist and they get a fine. Okay. And then you hope in 2 days' time you get your cash, and I hope in 2 days' time I get your securities. There's actually no certainty that's going to happen. We just take comfort that it probably will and it should. What we think is the future is when I sell my asset to you, your bank account is instantly cashed up. Mm-hmm. I'm instantly on the shareholder register, and the regulator is API'd into our chain where they can actually just see everything. So there's not triangulation, it's instant. So that for me is the big step in terms of, so regulators can actually benefit if this is done properly. But coming back to your question, our starting point is you need to comply with regulations. In our view, we need to make sure that regulators understand that this is a huge positive. And in fact, what we're doing is, ironically, we're de-risking the current business model, because at the moment there is enormous risk. If Lehman's goes bust again tomorrow, it's still going to take 10 years to figure out who the hell is owed and owes what, right? Because they've got hundreds of billions of derivatives trades. What you need to be able to do is if there is a cyclical event, it doesn't matter, because you and I traded, and when we traded, we settled. So you are longer cash and I'm now longer the securities. It doesn't matter if our broker goes bust, because we traded, we settled. So now what you can then do is, within that legislation and within that regulatory framework, you can actually then move to, if you wish, a 24/7 model, because you've made a thing of the past, counterparty risk and settlement risk, because the technology has solved that for you. So there's no reason why, not tomorrow, but in a few years' time, a regulator can't say, we actually get it. That's fine. We can see all the transactions 24/7. We understand what you're doing. This is fine with us. They're already regulating Coinbase, and Coinbase is a 24/7 market. So they've already demonstrated that they're comfortable with the marketplace operating 24/7. They're just not comfortable that this isn't a security. And I always think that they're just pain points that need to be addressed. But if you start from the fact that these are not bearer securities, this is a registered securities, central securities depository model, we're just taking TradFi and using innovation to make things, we're making the wheel spin faster, right? I had this analogy that if your bike has a puncture, right, you've got 3 ways to fix it. you can do what I do, which is blow the tire up every day because I can't be asked to fix the inner tube, right? So every day I just pump it up, and or you can take the inner tube out and put the inner tube, right? Or you can think about, is there a way that we can actually have a tire on a bike that doesn't puncture, right? So you've got different ways to approach it. Historically, pretty lazy and learn the first, but actually we're trying to think about the third thing. So T+2 has just moved to T+1 in the States. I kind of think it's still got a puncture. They haven't gone that whole step yet, which is you need to remove the risk of getting puncture by making a punctureless tire, and that's what T-Instant is all about.
Yeah. You mentioned you're a big fan of regulation. Totally agree. Is that the right way to put it?
I don't know if I'm a big fan of regulation.
Regulations
exist. They exist. Yeah, they're necessary.
Yeah. Okay. When you think about the very popular, maybe this year's meta, yield meta at least, is restaking. And do you think this is just a financial product by stealth? Like, at what stage is, how much can we say, oh, it's a DeFi, so it's not a financial product? Obviously, you mentioned the SEC. They've been pretty aggressive, actually, in chasing down some companies, some maybe more opportunistic, but some that are actually doing some, I think, good work. What do you think about restaking in terms of, is it a legitimate DeFi product, or is it just a financial product with a different badge?
I think it's probably a financial product with a different badge. But because ultimately you're just compounding yields, right? You invest yields to make yield. That's not new, but I think what the DeFi universe is demonstrating is the speed at which they can move, the speed at which they can introduce really cool products. And I think that was Coinbase's problem. They introduced a staking product, and the SEC said you can't do that. It's a wealth notice. And Coinbase were like, what? Why can't we do that? Mm-hmm. Please explain why we can't help our clients get exposure to earning money on exciting new opportunities. So I think the financial services industry, or if you like, financial services generally, what we have to try to do is to find a way to absolutely embrace this breakthrough technology innovation that these guys are bringing to the market. And you look at something like Uniswap. I use Uniswap, right? It's awesome, right? I can swap things with people who I don't know. No doubt, I'm sure has huge risk, in terms of AML and KYC. But it's out there, and at the moment, the SEC is, I think they've issued them with the world's notice. Mm-hmm. But Uniswap has demonstrated, just like Tether, right? They've demonstrated that there is a need and a role for this type of platform. Yep. That needs to, rather than be shut, I think it needs to be embraced and thought about in, okay, this has demand. We need to be able to somehow put a framework around this to make this available to the masses. So I think DeFi is moving at such a pace, and the regulators certainly can't keep up. They'll always be playing catch up, but somehow that in my view just needs to be welcomed, embraced, and put within some type of parameter and framework where it can be used globally all the time.
So you've got a lot of experience, obviously, in TradFi, but also in Web3, and you've operated around the world in these areas. Are there any jurisdictions presently that you think are doing a really good job of regulation in a way that's looking after people, but not constraining really great products and projects and innovators from innovating and building?
Yeah, I think so. If you I think Europe, which has always been pretty tough in terms of MiFID and MiFID 2, they're starting to look at the regulations, but in terms of MiCA. But within Europe, I never believed I would ever say these words. Germany, BaFin are standing out as just like a really, really user-friendly, innovatively open regulator to try to encourage Germany to grow. I've been blown away by BaFin. I think they are amazing. I think that Abu Dhabi, definitely, they seem to be putting a flag in the ground. There's a reason why the UAE is a leader in crypto. But Abu Dhabi specifically, they seem to be absolutely saying they want to embrace technology companies and crypto generally and innovation to come to Abu Dhabi. And I think that's a smart move. I think look, Hong Kong seems to be, and Singapore seem to be moving quite quickly. I think the States is definitely a challenge right now. I think the SEC has come down hard, and they've kind of made it clear that unless you prove to us, unless you come and talk to us, unless you register this as a security or prove to us that it isn't, you need to get out of Dodge. And I think that needs to be navigated quite carefully. I think there are some Central and South American places which are starting to look pretty interesting. I think El Salvador clearly has they really pushed the boat out in terms of position themselves. Yeah. I mean, look, they basically said, look, we want to embrace BTC as a currency, and we want to build our platform as somewhere to go and set up shop, and also make the country safe as a leader. I think that's really exciting. And there's a ton of stuff happening, right? But I think you're going to see, I think, almost like this ongoing race and battle for people to be, or companies to be able to seek what I call regulatory certainty. Because when you're investing a lot of money in terms of building a business, you want to have comfort that regulator isn't going to pull the rug. They're not going to change the rules. And I think the challenge for the States right now is, do you have that certainty? Can you build your business with confidence, and not necessarily have a knock on the door and be told the cease and desist kind of thing? And that's a concern.
Yeah. How do they? Is it political will? Is it? Do the scams need to stop, as if they ever would? And what do you think is going to be the thing to change that? I mean, obviously, we've got the BTC ETF cranking, and that was.
I think there's good things happening. Yeah, and I don't. Look, I think the they had good calls, right? You have Binance basically, totally sort of flaunting AML and KYC concerns in the States. Not clever. And obviously, we know what happened with FTX. So they were calls, right? I'm not criticizing them in any capacity. I'm just saying that they've taken a properly hard line in terms of what happens next. But with the BTC ETF, that was it's been a great year, right, for change. And it looks like the ETH ETF could get through. If that gets, we've obviously seen a couple of weeks ago, but if that actually gets over the line, does that mean that other protocol ETFs could start to emerge? I think it does. So that's going to be really exciting. I think if you look at adoption, right, there's the underlying tech, but at the moment, Apple's market cap is bigger than the entire crypto market cap, right? Apple's at 3 trillion, and market cap of crypto, I think, is at 2.5. So we're really early on in terms of adoption, right? So this has not matured at all. And I don't criticize in any capacity the regulators doing what they're doing. They have to do what they have to do to protect their investors. And as you said, the bad actors haven't helped the cause. All of that stuff, I think, will get dealt with, and it will get dealt with very quickly. Is it political will? Yeah, I think it is. I think in this, let's see what happens in the States, right? There's obviously an election this November, and just depending on who gets in, might change what happens at the SEC, right? And maybe that will change the appetite or the speed at which things change. But I think at you've got to. There's a balance, isn't there, between a country building its own GDP by putting a flag in the ground and saying you've got to come to us because we are open to innovation and crypto, and we've got a license regime, etc. But that's going to be tempered, or at least matched by having a regulatory framework that is robust enough to avoid losses. And in any fast-moving marketplace, you just got to go through these. I almost call them teething rooms. That's a really bad phrase for people who have lost a lot of money. You're just going to have to build a business. There are going to be bumps along the way, and I think generally, I think regulators are actually doing a pretty good job. We just thought they would have done this 5 years ago. I think I was on a podcast in 2018 and said, you won't believe how quickly regulators are going to move to put regulations in place. I mean, holy crap, I was so wrong. I mean, it's taken them a long time.
You were right, because
Europe's just
how fast they would do it.
I couldn't. Yeah. I just thought they were going to move a lot more quickly because of the concerns that I think they had. And anyway, here we are. I mean, look, we are where we are, right? But things now seem to be moving more quickly than they were. I mean, maybe you need FTX to screw things up for people to go, okay, we need to get shit together and get this fixed right. Maybe we needed a couple of those.
But it seemed to be traditionally, at least, that the big would eat the small. So in TradFi, you just couldn't go up against big money or big business. People would eat you or buy you or squish you or whatever that looked like. It seems to be these days, or at least in crypto markets, that the fast eat the slow. And so there are some bigger projects, companies with even still big treasuries, but who can't actually execute or can't move fast enough, getting eaten up by little minnows that are kind of speeding past them and getting TVL or getting adoption or getting users quicker than the people with money. I'm just wondering if we can zoom that out. Do you think that TradFi is going to come in and swallow up DeFi, or is DeFi going to swallow up TradFi? Will there be two parallel markets that just go on for forever? Or I know something like what you're building is really in both worlds. And so, you kind of speak both languages or you cover both of those bases. Just wondering, at what point do traditionally when the big would eat the slow, they would make those moves to do the eating. I'm just wondering, should we be expecting any of, apart from trying to create regulatory pressure, which is the only way that I've really seen any of the big, or trying to start their own failed NFT lines or anything like that. How do you see TradFi relating with DeFi going forward and vice versa?
I think you're going to see a combination of two things. I think you're going to have, BlackRock did an announcement with Securitize. I think as things start to mature, you're going to see, just like you get consolidation in every industry, right? So I think you're going to see some of the big TradFi shops start to hoover up some of these smaller innovation companies, these tech companies. I think that's a natural evolution. Because why would they try and replicate it when it exists already? You just buy them, right? So I think that's going to happen. But I also think, secondly, you're going to have the tech companies evolve simultaneously, right? And if you take the analogy, I was reading an interview with Elon Musk, and he was saying that he went right to the wall in 2011, like properly bust. And Daimler came out and backed him with, I think, a $50 million bucket investment or whatever it was. And that allowed him, he had to choose between SpaceX and Tesla. And the $50 million buck allowed him to keep Tesla open. And even at the time, no one really thought that Tesla would be bigger than Ford, right? Or any of the big car makers. But he demonstrated that if you bring an innovation, and he was very smart, because actually what he did was he made sure there were charging points across America. Mm-hmm. So it was very much, he was very, very clever to have that vision. Mind you, he's obviously a genius anyway. But so I think we're going to have those combinations of really fast moving tech companies that can grow exponentially in terms of their DeFi, for example. I think they're going to grow very, very quickly. But you also have the big TradFis who are just so long a cash, who will say, okay, we need to get into this space. Hey, they can buy us. No, who can get into this space? And that's how I thought about the idea. But they can get into this space by taking stakes or just buying out companies to put it into their portfolio and say, okay, we're now going to embrace this technology internally. I think you're going to see that over the next 3 to 5 years. As you're hearing BlackRock, Larry Fink talk about tokenization. Tokenized securities is the game changer. Being a fund manager, it's so inefficient trying to work out what stocks we hold and how can we take part in shareholder votes and all this sort of stuff. It's just so archaic. So these companies are starting to see the light. So I actually think you're going to have, you think about like Spotify and record labels, right? Record labels were all about selling songs and touring advertised songs. You then saw this shift very quickly where actually it all became about a 360 model, and the record labels had to say, we're going to lose out here unless we modernize. We need to do something very, very radical because we're basically like an oil tanker and we're taking too long to turn. So we need to embrace this very quickly. They have the power and the wealth. But I use that thing about Blockbuster and Netflix. Netflix went into Blockbuster and Blockbuster said, you're an idiot, get out. And then guess what? We know what happened next.
Yeah.
I think you're going to have all of those different moving parts over the next few years. But I see a major convergence. And once that adoption starts happening, and by the way, I think it's already now hit front and center right today, that consolidation is going to happen in the next 5 years, very, very aggressively.
Are there areas that you are particularly? You mentioned that the third arm of Valerium is capital. Are there areas of, or would you mind sharing maybe some of your investment thesis without giving away all your secrets? Obviously, what are the things you are most excited about or interested in, or what do you think is going to tip the scales in a way that would prompt you to allocate capital to it?
Yeah, I mean, I think yield farming, for example, right now is relatively unknown. I don't think people are particularly au fait with what it is. I must admit, a few years ago, I was not. We applied for and were successful in running a node on Polymath's blockchain. And in return, you're rewarded for running a node. And that was an eye-opener for me. So and now the speed at which protocols and new technologies are coming on stream, there is a demand for that capital. So I think that opens up a whole new investment category, which I think is really exciting. And not only are you investing and backing technologies to develop, you're also being opened to huge rewards if you choose the right one. I think there's a risk curve to balance there, right? So you can have your lower yielding, very low risk, higher credit types of investment, and then you can have your 200%ers, which are probably not going to succeed, but it doesn't hurt to kiss a few frogs. I think that is a really, do you know what I mean? So I think that's a really, I think that's a really exciting new area. Also, we come from the capital markets background. I mean, I'm a trader by trade, so we also want to apply that risk management and money management expertise as well to be able to maximize the returns for our investors. Right? That's ultimately what we want to try and do. But we want to we want to be involved not just as a technology builder and not just as an operator marketplace, but also by being involved in sector, by using third-party capital to deploy really, really efficiently and hopefully generate some fantastic returns. That's ultimately the objective. I don't think you can be in tokenization without investing, but we think that's a really exciting field as well to be in.
Yeah, agreed. What do you think 2024 is going to be remembered for, or people will look back on Web3 in 2024 and they're going to think it's just going to be dominated by Bitcoin halving and ETF, or is it going to be something else, do you think?
Yeah, I think 2024 will probably be remembered. I mean, look, 21 and 22 were probably the era of bad actors, right? And 23 was kind of cleaning house. 24, I think, will probably be remembered as the first sign of serious adoption and serious acceptance. The BTC ETF, I think, was such a big rubber stamp by the SEC to say, and BlackRock, right? To say, you don't need to worry about buying Bitcoin, Mrs. McGinnis. You don't need to worry about how the hell it gets stored. We'll just take away all of that pain for you, and you can buy something that is backed by BlackRock. Or any of those other providers. It doesn't get any better. That's probably the biggest maturing coming of age event that I think 24 will be remembered for. Yes, there could be other things happening this year, but that for me, and there's an Ether ETF as well. Those are two massive things to happen, huge things to happen, I think, in terms of adoption and acceptance. And ultimately, it's emotive, isn't it? It's subjective. It's, okay, this is actually here. You don't need to understand too much about the Bitcoin white paper. You don't really need to understand too much about what the technology actually does and what its use cases may or may not be. What's important is you can get, if you want exposure to that asset class, you can now do it legitimately with confidence and security. And that's huge. You don't have to open an account on Coinbase. You can just basically apply through your broker and buy a few units in BlackRock's ETF. That's massive.
Yeah. I remember back in 2017, the kind of, the whisper was, big money's coming in and institutions are coming in. And then 2018 was institutions are coming, and 2019 was institutions are coming, and 2021 people were like, oh, when are these institutions finally going to come in? And then now they're coming in.
Yeah, I think these things just took time, right? And I think there were times, especially with us internally, we were thinking, oh shit, maybe really, really pulled a short straw here. We've maybe gone down a road where nobody's starting to sing about this stuff, right? We could just be left there, right? Sort of, the music stops, there's no chairs. And it just seemed to then happen, right? And it seemed to build really slowly, and then suddenly, sort of coming through like this year. And it's like, because you're right, back 2021, a lot of the pre-FTX, a lot of the institutions were starting to really get involved. Goldman Sachs had a trading desk for Bitcoin, and pension funds were investing in BTC, and they were looking at crypto opportunities. And we were thinking, this is really exciting. And then it was like, we're out. No, sorry, no, we're out. This is no, we're and I think there were some sort of state teachers pension funds which probably invest $100 million in FTX, and that obviously didn't work out well at all. Those things I think are, they get forgotten pretty quickly, and I think now we're genuine. I think we're on a whole new path, and I'd like to. You're going to have rogues. I don't think an FTX can happen again, he says. I think, but But I think we're on a very much a different path now to maturity, and that can only be a positive.
Do you have any particularly contrarian views about either the market or technology, or about where we're going, or everyone's looking this way, but you're like, oh, has anyone ever looked over here? Anything in that kind of vein?
I think we've had to look. First of all, we've had to be a little bit contrarian about designing our tech. I think when we first started, we did face a you're going down a cul-de-sac. Things won't change. Things work perfectly well the way they are. I was told by one of the largest clearers, we can do this tomorrow. We don't need blockchain technology, etc. And we were thinking, well, you can, but you're not. So therefore, why aren't you? And Revolut, there was no need for Revolut, but they came and they moved so quickly. Why didn't the other banks do what Revolut did? I don't know, because they couldn't, because they're too big and slow, and you need that disruption. So I think as a contrarian, we were very much. The more people tell us it's not going to work and there's no need for this and you won't be able to do it, the more we definitely thought, we're onto a good thing, kind of thing. And I think anyway, look, as a trader, particularly as a historically a professional trader, what you're always looking for is generally you try and trade with a trend, right? But what you try to do is over time is you're looking for the point at which that trend changes. You're looking for that contrarian view. And Warren Buffett always says you can't make money while everyone's interested. You've got to make money while basically nobody's looking that way. And as a professional trader, the contrarian view is you're looking always for the signs where basically, if you think about it logically, right, just think about it as a simple thing. If you are such a huge deployer of capital, you can only actually accumulate a position on bad news. You can only actually distribute your position on good news. So what tends to happen is JP Morgan come out with fantastic results and all of the retail community get excited and buy JP Morgan. And then you watch that it hasn't actually gone anywhere. The volume's huge. The price action is zero. And what that tells me is, as a contrarian, okay, the smart money's bailing. Okay, and I know what's going to happen next. It's going to roll over and mushroom. And the retail guys are all sat there going, how did that happen? It was really good news. So I think we'll that you learn to be a contrarian if you've been around financial market. I think Mark Twain said, if you read the newspapers, you're misinformed. If you don't read them, you're uninformed, or one of those. But it's a bit like that. You got to take everything with a slight pinch of salt in order to be the contrarian. And we tried to use that within Valerium to say, look, we think there's an opportunity here to disrupt. We think it's going to do good. We will collaborate basically with everybody to try to bring in different technology providers, put a skin around it, like some would call it the Red Bull model, skin around it, and make that available to as many people as possible, because we think that's going to make things better. That's what.
Nick, you've given us the big picture of Valerium. What's the next thing? So what is, like, where are we at right now? Is it just building, or looking for partnerships now? Is there like a fundraising element happening? What are you doing now?
Yeah, so we actually, funny enough, we just announced 2 days ago a capital raise. So that was on Friday. We announced a capital raise. So we've just taken a bit of capital in, but we're always on a fundraise. So we're looking for more capital. We've in fact, we also just announced a technology on the same day, a technology partnership, which we're very excited about. But we are very much looking. We want to open a marketplace this year. That's on our agenda. And we want to introduce the first rollout of the tech. We want to open the Valerium wallet, which that's like a portal into all of our services. But I think this year has been about, if you look at 24 for us, it's been about putting in, we took over a company, the GSX Group. So it's been very much about bringing all of that IP and that in and getting everything, foundations in place for really 25 execution and basically scaling. So the tech platform will be constantly developed over the next few years as we roll out iteration after iteration after iteration. And we want to expand our marketplaces to basically open real world assets. We want to be able to get into all sorts of exciting stuff, ranging from real estate through to royalties, right? There's huge amounts of stuff that tokenization we think opens up in terms of addressing, in many ways, there's sort of closed markets historically, fractionalization via tokenization. But then also in 25, trying to open a public exchange where securities can actually be, public companies can be traded. And we think that's going to be so exciting. So we've got a pretty clear 2 to 3 year roadmap ahead of us. We laid that out to the market back in February. And now obviously we've got to deliver on our promises, or I'll be short-dated stock. But and just basically, just pedal to the metal, right, and moving as quickly as we can to embrace this innovation. I think it's generally one of the most exciting periods that we've been presented with in probably a couple of decades. Again, it's great when this stuff comes along. You just got to make the most of it.
Nick, if someone wants to hear more from you online or to find out more about Valerium, where can they do that?
If you go to VLRM, as in Valerium, so VLRM.com, go to Valerium.com and everything is on the website there and you can find everything about us. And reach out to us. We'd love to talk to you. And we've got a Telegram group as well, which is called the Valerium Telegram group. So we're on there on TG.
We'll chuck all that into the show notes. And Nick, thank you so much for joining us.
Thank you.
We appreciate it. And all the best for the building.
Thank you so much for hosting me today. I've had a great time. Thank you. Very, very kind. Thank you.
Thanks for joining us again today. We hope you enjoyed this episode of Off-Chain. We love bringing you great guests like Nick to talk about the future, talk about Web3, finance, technology, and how the future is being built on-chain. As always, like, subscribe, or better yet, share this episode with a friend. Help us spread the word and join us again next week for another great episode of Off-Chain Podcast. Till then, take care.